Good afternoon, ladies and gentlemen. Thank you very much for joining us for this briefing. We would like to start the financial result presentation for fiscal year that ended in March 2016. Let me introduce the officers present with us this afternoon. Akio Toyoda, President and CEO of the company. Executive Vice President Takahiko Ijichi. Good afternoon, ladies and gentlemen. Director and Senior Managing Officer Shigeru Hayakawa. And the timetable for today's session is, first of all, President Toyoda giving you the overview of our financial results, to be followed by more detailed presentation by Ijichi on the detailed aspect of financial results. And after that, we would like to open the floor for discussion. And this is also connected with Nagoya office, where journalists are participating from Nagoya as well. And this press conference will be uploaded for the web, including Q&A session as well. And the presentation materials, at the outset, you will find the forward-looking statement and the precautionary statement for that. So please go through that later on. So without further ado, I'd like to invite President Toyoda to the podium. Thank you for waiting, ladies and gentlemen. My name is Akio Toyoda. Good afternoon, and thank you very much for taking the time to join us today for this financial result announcement. First, on behalf of everyone at Toyota, I would like to offer my heartfelt condolences to those affected by the recent series of earthquakes in Kumamoto Prefecture, as well as their families and friends, and also express my sympathy to those people who are still living under very difficult circumstances. We are praying for a swift recovery in and around the stricken area. Looking back on the fiscal year that ended on March 31st, we achieved an operating income of 2,853.9 billion yen due to concerted group-wide cost reduction efforts coupled with the depreciation of the yen. I would like to take this opportunity to thank each and every one of our customers around the world for choosing us. We are also deeply grateful to our dealers, suppliers, and all our other stakeholders for their invaluable support. The year-end dividend for common stock shareholders will be 110 yen per share. As a result, the total annual dividend will be 210 yen per share, including the 100 yen per share that we paid as an interim dividend. We also plan to implement a new share buyback up to a maximum of 500 billion yen, or an upper limit of 100 million shares. To reward our shareholders, we will continue making every effort to improve our corporate value and ensure stable and sustainable returns. Before we move on to the details of our financial results, I would like to briefly talk about my business philosophy. Over the years, we have faced a wide range of challenging issues, such as the financial losses after the global financial crisis, the recall crisis, and the Great East Japan earthquake. However, despite these issues, we are consistently maintain one aim: achieving sustainable growth. So, what are the conditions necessary to achieve sustainable growth? Personally, I have focused primarily on building a sustainable foundation to create ever better cars and the development of human resources. After all, there is no use in swinging between elation and despair. Every time sales and earnings decrease, remain flat, or rise. Rather, we are steering our business based upon the yardstick of personal growth. This means focusing on giving people the encouragement and tools to make judgments and act based on the concept of Genchi Genbutsu in order to attain our goal of making ever better cars. During last year's announcement, I mentioned that we had shifted from an intentional pause to strengthen competitiveness towards an implementation phase, and that we would start making new purpose-driven investments. In doing so, we have three main goals. The first is to become a company that is capable of making steady progress toward the creation of ever better cars. The second is to sow the seeds for growth in both existing automotive fields and in fields beyond the conventional boundaries of our business as a challenge for the future. The third is to build a strong financial foundation capable of withstanding another event like the global financial crisis. Based on these goals, we have implemented initiatives to take on the following three challenges: the challenge of creating ever better cars as exemplified by TNGA, the challenge of creating ever better plants as exemplified by our new factory in Mexico, and the challenge of new value creation as exemplified by the Toyota Research Institute, TRI. From a financial standpoint, we believe that we have built up the strength to take on these challenges. However, our initiatives are still in the implementation phase. We have benefited from an exchange rate tailwind that has helped raise our earnings above the level of our true capabilities. Although this has enabled us to take on new challenges, that set of circumstances is likely to change for the worse this year. I accept this change as an opportunity that can help us achieve our challenges. Toyota has become too big to respond speedily to severe changes in the business environment. This prompted us to start finding ways to overhaul our working practices, and in April this year, we implemented a wide-reaching reorganization. We have taken another step toward creating ever better cars by splitting our organization into smaller, independent, and product-focused companies. We made this decision because products are the starting point for our efforts to create ever better cars. In fact, Lexus set the precedent for this change. We showed the LC500 at the Detroit Motor Show in January this year. I think that the LC500 Coupe is a type of model that could never survive as part of Toyota's 10 million unit production plan. However, we set up Lexus International in June 2012 as a precursor to the new company system. As a highly flexible and nimble organization, Lexus International provided the driving force behind the decision to produce the LC500.
Under a system of smaller companies, cars that might seem insignificant alongside a figure like 10 million may have a better chance of survival. The thing that customers value in their cars and the way that customers use their cars vary greatly. That's why we will leave it to each company to determine their priorities in terms of performance, design, and value. This will enable us to be more flexible than ever in providing the cars that our customers want. In the future, the product lineup of each company is likely to change in the same way as it did with Lexus. In fact, one aim for the future is to bring about radical change to the very idea of the car itself. Another way that we will take on the challenge of overhauling our working practices is through alliances. For example, the development of small cars has been one of our weaknesses. Rather than being obsessed with doing everything ourselves, we are aiming to enhance competitiveness by reaching out to partners such as Daihatsu and sharing ideas for creating ever better cars. There are many lessons that we learned through developing the 866 Subaru and also through our alliances with Mazda and BMW. These lessons extend to the use of resources and money, as well as learning about passion, speed of decision-making, and manufacturing technology. Our alliances offer us valuable opportunities to learn why we could not do things that our partners could. Collaboration with our competitors is also one form of stimulus that will help us improve how we work. It was one of the major reasons why we took the decision to adopt a new organization. I think the results of our alliances contributed to that as well. Rather than stopping short of simple capital tie-ups or joint product development, alliances are an excellent opportunity to help us create ever better cars and to identify key ways to strengthen our global team. Through alliances, we can objectively review our own competitiveness and the way we use our financial resources to bring about change in the way we work. I mentioned that our circumstances are likely to change in the future. This does not simply refer to changes in our short-term business environment and profits. It is also a fact that mobility itself is reaching a critical turning point. We want to embrace that momentous change and actively work to create types of new value that cannot be generated within the boundaries of the conventional automotive business. The Toyota Research Institute, TRI, established in January this year, is one such initiative. For me, TRI is like the automobile department that Kiichiro Toyota established within the Toyota Automatic Loom Works, the predecessor of Toyota Motor Corporation, in 1930. And back then, he took on the challenge of making a substantial paradigm shift, going from building automatic looms to building cars. Together with TRI, we are creating the opportunity to make another fundamental change in our business model. Automated driving and robotics are challenges that affect us closely. However, artificial intelligence is a vital basic technology for many industries outside the automotive industry as well. We are aiming to create new types of value that can contribute to society above and beyond the perceived scope of our own industry. We will support the activities of Dr. Gil Pratt, TRI's CEO, and his team by providing the freedom to face these challenges. Finally, I would like to sum up my feelings about the current fiscal year. I think that this year will be a test of whether we can transform our intentions into reality. We are prepared for our circumstances to change this year, and as such, we have already worked hard to strengthen our competitiveness and build a robust financial foundation. Rather than simply reacting to events as they occur, we must always be ready to overcome any circumstances and face up to the changes ahead without wavering from our core goals. Until now, we based our approach on a certain set of theories, but now that we are taking actions towards sustainable growth, rules have changed, and so therefore must those theories. We need to show the strength of will to forge new roads so that we can continue taking on challenges for the future to build ever better cars and develop an ever stronger global team. Thank you in advance for your continued understanding and support.
Good afternoon, ladies and gentlemen. My name is Ijichi. It's my pleasure to discuss Toyota's financial results for the fiscal year which ended in March 2016. Compared to the previous fiscal year, consolidated vehicle sales decreased by 291,000 units to 8,681,000 units. Sales increased in North America against the backdrop of a solid market. However, sales decreased in Japan, where the mini vehicle market contracted, in Asia, where competition intensified on the back of sluggish markets, and in the Middle East, Africa, and Central and South America, where weak oil prices and local currencies affected demand. Our consolidated financial results for the fiscal year were net revenues of 28,403.1 billion yen, operating income 2,853.9 billion yen, pre-tax income totaled 2,983.3 billion yen, and net income totaled 2,312.6 billion yen. I would like to explain the factors which impacted operating income year on year. Starting from the left-hand side, the positive factors such as cost reduction efforts and favorable forex rates more than offset the negative factors such as decreased vehicle sales and increased expenses, particularly labor costs and R&D expenses. As a result, operating income increased by 103.4 billion yen compared to the previous fiscal year. Next, I would like to elaborate on operating income for each region. Please note that in the presentation slides, each region's operating income excludes valuation gains and losses from interest rate swaps attributed to financial services. In Japan, although new models such as the Sienta and the Prius drove sales, overall vehicle sales decreased by 95,000 units year-on-year to 2,059,000 units, as the mini vehicle market was sluggish. Operating income increased by 102.6 billion yen to 1,676.7 billion yen, mainly as a result of cost reduction efforts and favorable foreign exchange rate, in spite of decreased vehicle sales and increased R&D and depreciation expenses. In North America, vehicle sales grew by 124,000 units to 2,839,000 units year-on-year, driven primarily by SUVs such as the RAV4 and Lexus NX on the back of a solid market environment. Operating income was 505.6 billion yen, down 32.2 billion yen compared to the previous fiscal year. This was mainly due to increased costs for the relocation of North American headquarters and declined profitability of exports to Canada and Mexico caused by the stronger U.S. dollar, which more than offset the increased vehicle sales and cost reduction efforts. In Europe, vehicle sales decreased by 15,000 units year-on-year to 844,000 units. This was mainly due to decreased sales in Russia, where the market was affected by weak oil prices and ruble depreciation, despite solid sales in Western Europe. Even with the negative foreign exchange impact and fewer vehicle sales, however, operating income rose year-on-year to 75.7 billion yen, primarily due to the effects of marketing activities such as pricing improvement and cost reduction efforts. In Asia, overall vehicle sales were down 144,000 units year-on-year to 1,345,000 units, particularly due to decreased sales in Thailand and Indonesia, where competition intensified on the back of sluggish demand. Nevertheless, operating income reached 455 billion yen, up 21.4 billion yen year-on-year. This was because the negative impact of declined vehicle sales was more than offset by marketing efforts, such as pricing improvement, improved profitability of exports due to depreciation of the local currencies, and cost reduction efforts. In other regions, overall vehicle sales were 1,594,000 units, down 161,000 units year-on-year as a result of decreased sales in the Middle East, Central and South America, and Africa, where weak oil prices and local currencies affected the markets. Operating income declined by 6 billion yen year-on-year to 103.4 billion yen, despite the positive impact of pricing improvement and the full model change of the IMV series, mainly as a result of deteriorated import profitability due to weaker local currencies and rising labor costs with inflation in Central and South America. Moving on to financial services next. Operating income excluding swap valuation gains and losses for the fiscal year maintained the level of the previous fiscal year at 319 billion yen. This was a result of growth in both lending balance and margins, which offset an increase in cost related to loan losses and residual value losses.
Equity and earnings of affiliated companies for the fiscal year was 329 billion yen, up 20.5 billion yen year-on-year. This was a result of strong performance of our affiliated companies in China. Next, please look at the slide on shareholder return. Earlier today, our board of directors resolved to pay 110 yen per share as the year-end dividend on common shares. The full-year dividend on common shares for the fiscal year will be 210 yen per share, including the interim dividend of 100 yen per share. This represents an increase by 10 yen per share compared to the previous fiscal year. This is based on our policy of paying stable and sustainable dividends, targeting at a consolidated payout ratio of 30%. Next, also today, our board of directors resolved a plan to buy back up to 500 billion yen or 100 million shares of our common stock. Adding this to the already repurchased common stock in the amount of 139.3 billion yen following the resolution at the second quarter financial reporting, our total share repurchase for the fiscal year to March 2016 will be up to 639.3 billion yen or 123 million shares. Please look at the chart, which indicates the total shareholder return over the recent years, consisting of both dividends on common shares and Model AA class shares and share repurchase. The total shareholder return for the fiscal year to March 2016 will be up to 1,287.2 billion yen, representing a payout ratio of up to 55.6%. In appreciation of a long-term relationship of trust with our shareholders, we will continue to ensure stable, sustainable, and flexible shareholder return. Now, I'd like to move on to discuss the outlook for the current fiscal year, which will end in March 2017. Following the Kumamoto earthquake, we suspended all vehicle assembly lines in Japan in stages. We regret that this may have caused inconvenience and concern to our customers and all other stakeholders. Since April 25th, we have restarted these lines in stages and are back to normal operations. We are now making maximum efforts to deliver vehicles to our customers as soon as possible. However, please note that the impact of the suspended operations is not factored in our forecast due to difficulty in estimation at this point in time. We appreciate your understanding. Our consolidated vehicle sales are expected to increase by 219,000 units year-on-year to 8.9 million units. We anticipate sales growth in Japan driven by CHR and other new models on top of the recently launched Prius and Passo. In Asia, due to a full-scale marketing of the IMV series, and in Western Europe due to continued strength of the markets. Based on the forex assumption of 105 yen per US dollar and 120 yen per euro, our forecasts of consolidated financial performance for the fiscal year to March 2017 are net revenues of 26,500 billion yen, operating income of 1,700 billion yen, pre-tax income of 1,900 billion yen, and net income of 1,500 billion yen. This is the analysis of our operating income forecast for the current fiscal year in comparison to the previous year. The negative impact of forex rates is the most significant cause for the expected decrease in operating income year-on-year, while continuing cost reduction and other profit improvement activities, as well as benefiting from increased vehicle sales. We will also assume an increase in expenses. As a result, we expect a decline in operating income by about 1.1 trillion yen. This is the outlook for R&D expenses, capital expenditures, and depreciation expense. CapEx is expected to increase by 57.5 billion yen compared to the previous fiscal year due to investments for production facilities for new TNGA models, as well as the full impact of building new North American headquarters. R&D expenses are also expected to increase year-on-year as development of advanced and cutting-edge technologies accelerates. We are determined to continue our investments for the future regardless of external factors such as foreign exchange rates. At the same time, we aim to enhance efficiency and effectiveness of our investments and further improve our prospective earnings going forward. This concludes my presentation on the financial results for the fiscal year to March 2016. Thank you for your attention.
Now,
ladies and gentlemen, we would like to receive questions from you. Those of you wishing to ask a question, please raise your hand so that the microphone can be brought to you. And to provide opportunities to ask questions to as many people as possible, I would like to ask you to restrict to 2 questions per person. The person in the front row, please. Suzuki is my name, of Asahi Newspaper. My question is addressed to President Toyoda about the financial results that you have just announced. In the past, you did have the highest record profit in March 2016, but there is a major change. And for March 2017, you're expecting substantial reduction in operating income. And I would like to invite your comment on that. And earlier you said that you are likely to see change in the external environment. What is your view of the environment going forward? And you used to talk about the purpose-driven investment. How do you intend to tide over those issues and difficulties in managing the company over medium term? Thank you very much for your question, and let me answer or respond to those questions. With respect to the financial results for the fiscal year ended just now, I would like to express my sincerest gratitude to customers of Toyota, Lexus, and Daihatsu vehicles. And also, this is thanks to the serious efforts made by our dealers, suppliers, and our stakeholders, and my sincerest gratitude goes to all of them. The financial results of the past 3 years represents and record that has been held by exchange rate tailwind. And now that the tailwind is gone, what we really are has become apparent, I believe. In pursuit of our true competitiveness and capabilities, and now that we no longer enjoy this tailwind, we really have to have this strong goals to see whether we can really continue working toward that goal. The strength of that goal and determination is tested in the current in the current year. And given that, in terms of the future and the course that we are going to follow going forward, and the challenges that we may face in that process, as I mentioned in my earlier remarks, I said that the theories that brought us here today will no longer serve us well going forward. And it is going to be related to that particular comment. The way in which we conducted work when the volume was 6 million will be quite different now that we have the volume of 10 million. At the volume of 10 million, the way in which we can manage the business would naturally be different. This, as you can see, those figures, or I knew that you were going to follow up with that question. You see triangle, quadrangle, and also the polygon. You have 6 hexagon. And 3 people, or 4 people, or 6 people, with those different number of people engaged in those activities, how many lines you see internally that would require coordination internally? And that's what I'm trying to indicate by that. Using those 3 triangle, quadrangle, and 6, it might represent 3 million units, 4 million units, and 6 million units. When it is a triangle, only having 3 million, you didn't require to spend a lot of time for internal coordination, but if you have 6 million vehicles to sell, you have to spend quite a bit of time for internal coordination, thrashing out difficulties. Now you have 10 different sites selling 10 million. You'll have 35 lines internally inside that polygon. We have now entered the area of 10 million units. And we had only 10 internal lines, or 9 internal lines, when we were selling 6 million units. But we now have 35 lines to be coordinated. And if there's one change made in one of those changes, the remaining 34 lines must be changed at the same time to accommodate that change taking place on the single line. And therefore, the way in which we do business and manage your business with 10 million units must be totally different from the way that worked at the volume of 6 million. Toyota was known for strength of its different functions, and those strength of the functions sustained our growth. But as the company grew, and more and more time is required for internal coordination, I think that somehow slowed down the speed at which we could make decisions and take actions. So from that perspective, using this company system that we inaugurated in April of this year, that the leaders now have a greater responsibility. should be at the starting line to make decisions closer to the front lines of operations, so that the challenges that is faced by the bigger company may not be solved right away, but including in development of a team members and human resources, I think those reorganized company will offer us a greater opportunity, I believe. And as for the financial results, I'd like to ask Mr. Ijichi to supplement. Including some numbers, I would like to respond to your aspect of a question relating to the specific numbers. In the fiscal year ended in March 2016, actually the volume actually decreased by 291,000 units, mainly due to the countries where the market declined in Asia or the Middle East. But in North America, the Western Europe, where the market remained strong, we were able to grow our sales volume. So in terms of our competitiveness and product capabilities, I think we now enjoy greater strength. So in fiscal year ending in March 2017, in the United States, Western Europe, and advanced countries where the market is expected to be strong, in the emerging countries or resource-rich countries where the market had been stagnant, that margin of decrease will be smaller, and also in some of the markets, the market seems to be bottoming out. So supported by the introduction of new models in the second half of the year, we expect that we'll be able to grow the volume rather significantly. We are expecting a sales increase of 220,000 units. In terms of the profitability, in fiscal year ended in March 2016, in order to strengthen our competitiveness in the future and also to solidify the foundation for sustainable growth, we invested rather substantially for research and development as well as in plant and equipment, and that increased fixed expenses. But that was made up for the gross profit improvement, including cost reduction efforts, and with that we were able to achieve the profit increase of 100 billion yen. But going forward, the impact of exchange rate and also the valuation gains and losses coming from accounting standards, excluding impacts in those areas, the profit will decrease, expected to decrease by 60 or 70 billion yen, but the impact stemming from accident resulting in plant shutdown, that caused 60 billion yen. So if that is taken into account, in essence, I think we were able to maintain the profit level comparable to the previous fiscal year, we believe. But as for the fiscal year ending in March 2017, so the currently running period, for that, as for the exchange rate, including the current market conditions for dollar-yen exchange rate, we made the assumption for 105 yen to the dollar and 120 yen to euro. And so if we take those exchange rate assumptions, the exchange rate itself will be a substantially large negative impact. But even with those negative impacts, we'll intend to continue making investments for our future growth without relaxing our efforts in that area. But excluding those exchange rate impacts and valuation gains and losses in terms of accounting, even today, the cost improvement efforts will have a negative 65 billion yen. So at least as for that negative smaller amount of cost improvement efforts, we intend to make up for that and improve the situation. The cost improvement efforts and marketing efforts, the current projections I cited earlier includes only those cost improvement and marketing efforts whose effects are clearly identified at this point, and therefore there is quite an upside in those areas. And although expenses in general are increasing, but when those expenses are actually spent, each one of them will be scrutinized and examined to make reduction as much as possible. And therefore, in addition to those recovery of a small minimum of 65 billion yen in the negative, we intend to absorb as much as possible the negative impact stemming from exchange rate fluctuation as well. Thank you. Anybody else for the next question?
From Nikkei newspaper, Okdaira speaking. First question is related to the previous question about the management environment, business environment. And if you think about the business environment, there was the Lehman crisis in 2009, and then the Great East Japan earthquake and flooding, and there was a kind of a turning point. But how is the business environment different from those times? And also, well, you had 85 yen and 7.5 million getting the operating profit ratio of 5%. And so what is the attainment? And along with talking about the business environment, can you comment on this, if I may answer from my side? At the time of the Lehman crisis, I was also involved, and fixed expense was growing, but I think now the content is different. At the time, we pursued volume, and as a result, fixed expense rose. But this time, towards the future, we are using our funds for growth. And so fixed expense may increase, but the content of that increase is different. The quality of the increase is different, in other words. And in terms of the profitability, if you look at those times, that is March ending, period ending to March 2008, it was the time when we had the highest earnings. And if you compare that to the prospect for the year ending March 17, if I may make a comparison, raising some numbers, in March 2008, it was 2.27 trillion. And the sales volume is about the same at 8.9 million. And at that time, the Forex, the exchange rate was 114 yen, and the euro was 162 yen to the euro, Australian dollar 99, and Russian ruble was 1/3 or 3 times the present level. It was weak yen, in other words. And so therefore, compared to those times, 570 billion, simply put, the income went down, earnings went down. So you have the exchange rate impact and also the accounting gains and losses, and together it's about 1.2 to 1.4 trillion yen scale. And so therefore, if you think about that and take that into consideration, still you have only 570 billion drops. So conversely, compared to those times, the profitability has gone up 700 billion yen or 800 billion yen. So in that sense, we had, after the Lehman crisis, the efforts accumulated, and I think that those efforts are seeing fruit. The external environment is very severe, but we are focusing on the business environment, for example, TNGA or the next generation technology development, and these are the seeds for our future, and therefore we are going to go steadily forward in those respects. Thank you. And about the 5%, well, 2011 global vision, when we came up with that vision, it was around the time of the great earthquake, and the Lehman crisis lesson was learned, and therefore sales volume 7.5 million, dollar yen 85 yen, euro yen 100. That, even if you had that kind of situation, operating income rate would be 5%. So about 20 trillion yen of sales, and 1 trillion in operating income would be gained. So that was at the time of year ending March 2013. I think we said that this 7.5 million units and 85 yen and 1 trillion yen, these targets were pretty much attained. And after that time, 3 years have passed, and over those 3 years, well, these 3 years were active investments made for the future, and we had cost improvement, cost reduction, and we had sales, marketing efforts, and we had the Forex tailwind, and therefore that led to the results of the year ending in March 2016. But towards March 2017, if we didn't take any action, then of course the profitability would be worsened, and therefore, as I have been saying, we still have 1 year, and so we are going to work further to make cost reduction and make marketing efforts to raise profitability. So 7.5 million and 5%, we are going to continue to persist on these numbers. Now we can get the next question. Let me add one more question. Mid to long-term seeds to be sowed, and I think that was explained that there's TNGA and AI and automated driving, and I think these are targeting 2020, and this time you have a very difficult environment in which you're going to invest for the future. So until 2020, are you going to keep up this pace? Even if the external environment changes, the pace is not going to change, the speed is not going to change. I'd like to ask this question. Well, it's as you say, TNGA. Well, the vehicle will be made completely different to make it competitive. It will be a big change. And in 2020, the half of the vehicles sold by our company will be through TNGA. And therefore, the effect, there's Prius that has been sold recently, and this year too, there should be some vehicles that use this TNGA, and that effect is becoming fruitful. And then you also have the high-level investment continuing, and that will continue for a while. But with regards to the increase in fixed expense, well, it's a matter of course. Gross profit improvements will be made so that we will try not to degrade the profitability. And in terms of the external environment, a stronger yen is something that we have to look at, and profitability will become more difficult. So what are we going to do for future investment? With regards to the strong yen, we had experience in the past, well, many times. It's not like there's some miracle cure. You have to keep on doing the matter of course things to respond to the strong yen, and still secure our profits and also continue our investments for the future. So I think for management, the balance is going to be very important. At any rate, the investment for the future needs to be controlled strictly.
What about the next question? The person in the middle of the room, please. Enokida, OBS Japan. Question addressed to President Toyoda. The currency assumption for the current year is 105 yen to a dollar. At that level, yen is somewhat stronger. So this is based upon rather conservative base. And what's the reason for taking such a conservative assumption for currency? We were not intentionally conservative in making these assumptions. It was more mechanistically determined. That is to say, when we're making projection for the next fiscal year, of course, we determine the currency assumptions. Between the early part and middle part of April, we look at the actual prevailing market rate. And on the basis unit of 5 yen during April, the average rate was around 109 to the dollar. If I say 110, people don't like it, so we refer to 109, and therefore, instead of bringing it up to 110, we took 105. So as it turned out, it was conservative. Even going forward, we expect 105 to continue to prevail in the market. I mean, if you knew what would happen in the currency, that would be the best solution, but it's so difficult to forecast where the actual market rate will be. And therefore, by determining where the market rate is at any given time to come up with the measures which most suitable for that is the key. There are various measures to take actions for currency. I mean, Initially, cost reduction would be the best because the stronger currency means higher cost in Japan, but it takes time. So, trying forward currencies or improving the product mix, or if it is possible, we make a pricing adjustment or price increase. So, combination of that, we try to secure the good profit. So, of course, there are certain, we feel some movement in the currency market in general, but that in itself does not result in any change in the operation. Mr. Toyoda, under this tough currency environment, how do you intend to manage your operation? Could you make one comment, please? The currency or the exchange rate? If possible, I would like to operate in the environment or in the company constitution that is immune from the impact of exchange rate fluctuations. In the case of the automotive industry, we receive parts and components from many suppliers. We work with many partners in the supply industry to sustain this industry, and therefore, if the fluctuations of the currency prevents from flexible actions, because even if the currency moves quite rapidly, that doesn't allow the very rapid change in the supply chain, which is more or less fixed. We would be faced with difficulties, and therefore, as a necessary industry, we would like to nurture our industry, which is not really affected by the fluctuations in the currency. May I invite the gentleman in the middle, the journalist from overseas, in the center of the room, please? I'm from Italy, the Economic Journal, and I'm the correspondent stationed here in Japan. Quite recently, Sergio Marchionne, the president of Fiat Chrysler, is groping for the partner to merge with a major car maker. The Ford, Volkswagen, Toyota, those are the names cited by him. Any reaction or any comment or any thoughts on your part, Mr. Toyoda? Thank you for asking a question from Italy, and thank you for asking a question in fluent Japanese. I really appreciate that. In many different companies, we work together, and in partnering with different companies, fundamentally, if the partner is willing to produce ever better cars, we always maintain open attitude in working with any partner. That's our basic thinking. But alliance is something that Toyota is not really good at. And therefore, not just seeking equity relationship is not the good enough reason for us to join hands with. Rather, by joining hands, what sort of chemistry is created as a result of that, and how can we find a way of building ever better cars? Those would be the yardstick that we look at in deciding to enter into alliance or partnership or not. We do have existing relationship with some of the partners. And through our collaboration with those competitors, we have learned many lessons. That is to say, those rival companies or competitors in producing or building cars for investment projects, the sort of size of the investment they make is something that we refer to. In addition to the benchmark we use internally, we refer to the sort of investment our competitors or partner make. And they represent a very important reference point for us. And now that we have company-based system organizationally, the criteria used for benchmarking will allow us to make ourselves reborn into a company with even stronger financial foundation, and I sincerely hope that will be the case. At this juncture, I would like to entertain questions from Nagoya office.
Chubu Keizai newspaper will ask a question from Nagoya, please. My name is Kikuchi, and I have two questions. First question about domestic production. You have a strong yen recently, and the overseas production, if you raise the ratio, then I think that could lead to profit. But I would like to ask your view on domestic production and exports to North America and China. It seems that you have an increase, and also that is your plan for this fiscal year. But what about the other regions? Are you going to increase exports? Second question about your supply chain. there was the Kumamoto earthquake impact, and there was a suspension of operation. And among the suppliers, there is talk about diversifying the supply sites. And from the viewpoint of BCP, in the future, how are you going to call on the suppliers to take action so that you can have the optimal supply chain? If you could explain your views on the optimal supply chain. So 3 million in domestic production. Basically, the assumption is that we have competitiveness and we produce where there's demand. And in that sense, with regards to the side of production with suppliers, we should have good consultation and take a mid to long-term perspective and make decisions. And therefore, just because foreign exchange is this situation, in other words, just the short-term external environment changes will not lead to making the different decisions. And 3 million in Japan, well, in terms of the source of competitiveness of manufacturing, we feel that is in Japan. That is competitive technical development and production technology. And these are the two wheels of a car, in other words, leading to the strength of Toyota. So you could have wonderful technology, and if it's just in the lab, it's not meaningful. It has to work as business, and you have to be able to produce. So in that sense, I think that should be done in Japan. And in order to do that, at the least 3 million vehicles, I believe that would be necessary. And to elaborate further, we do a lot of things in Japan, including R&D, and there are fixed expenses because of that. And in that sense, too, and also to protect employment, the fixed expense in Japan should be covered. And that means that 3 million vehicles will be necessary. And therefore, before, there was a strong yen. And I think Mr. Toyoda had said that this 3 million will be maintained at all costs. And the supply chain question will be answered by myself. At the time of the Great East Japan earthquake, there was a lesson learned. That is, the first action taken after the event and the activities for early recovery are very important. And we share that view with our suppliers too. And we have the relationship of trust, which is the foundation. Second-tier suppliers and third-tier suppliers have also been researched. And we designated the risky items. And for those items, countermeasures are implemented. And at the suppliers, there are BCPs, business continuity plans, that are prepared. That kind of effort is also being promoted. And with those efforts, well, the supplier situation and the parts supply situation should be grasped very quickly. And therefore, we are building up a database which is gradually being built up. And we have the IG Steel incident and the Kumamoto earthquake and the identification of problems. Early countermeasures, we believe, were taken. However, as you know, one automobile has about 30,000 parts or items. And so we have many models at Toyota. And that means that well, we may have hundreds of thousands of parts. And identifying risky items and coming up with countermeasures means that we have to come up with priorities and implement in order of those prioritization. We are going to use the lessons learned from the past, but we feel that this is an endless endeavor. And with regards to the countermeasures to take, we are still only partway there. And we are going to continue to collaborate closely with our suppliers to make further improvements. Well, I think our time is almost up, but we can entertain 2 more questions. And one person should ask 1 question each. And the person that is 2 rows from the front, please.
Miyake, Kyodo News Agency. Thank you for this opportunity. In relation to your organization, you touched upon earlier, and you also referred to this briefly, building ever better cars, and in addition to that, developing human resources. Those were the major motivations behind this reorganization. And my question relates to this reorganization. In terms of those different companies, you are trying to nurture the future generation of leaders through those company structure. And as you do that, as president, when you became a president, you said that you took sales in the storm. And as you hand the baton over to your successor, when and with what sort of philosophy are you going to hand the baton over to your successor? It may be further into the future, but if you could share your thoughts right now, I'd appreciate that very much. I personally, since I became president, what is the sort of a time frame that I think about is something that I often think about. I'm not talking about my service as president, but in managing or running the company and having that responsibility. And when I was given that responsibility, and if I had been asked the sort of time frame at that point in time, probably I would have answered that I would have to commit myself to 20 or 30 years into the future. So the commitment over 20 or 30 years. And that's what I thought internally myself. So if I were to hand this responsibility over to the next generation in terms of the vision, the CEO, in the case of car making, we refer to them as a president. Those are the people who are close to the front line of operations, close to the products. I already assigned those people with the responsibility and authority to make those decisions. And for the next generation of president, some of those people may be appointed as the future president, but not just limited to those, but those people currently serving as a general manager of a certain divisions or managers. For example, when I make presentations or discussion sessions for middle managers, the sort of people invited to those would be the candidate for next generation. And why I think that way relates to the fact that I would like to hand over the responsibility in the well-balanced manner in terms of company structure and company status. So always looking at 20 or 30 years into the future, I'll take strategic actions that need to be taken now so that the next generation, the people who come after me, will be able to reap the benefit of that and obtain the benefit of that. So sowing seeds and also strengthening the foundation for building better cars. Once those are in place, I would like to hand the baton over to the next generation. But this is the sort of thing that may not be able to follow the plans. So I don't know when that may change, even if I'm thinking in that manner right now. But that's the sort of faith I have when I think about the succession. And when I think about the handing the baton over to the next generation. And I may be repeating myself, but if you hand over the baton, you really have to hand it over directly with two hands. So by having this company system, well, we have just experienced 1 month experience of that new structure, but in many respects, the rejuvenation of this organization is already going on, and younger people have started being placed in those responsible positions. So in that, as for the future leaders who may come up from the areas closer to the forefront of operations, is something that I would like you to continue observing and monitoring going forward.
Yamamoto from Chunichi newspaper, and I'd like to ask a question to Mr. Toyoda. You mentioned at the outset about the TRI comparison with Toyota Automotive Looms, and it started as a venture, in other words. And starting as a venture, it became, well, this company became a very huge international company, and you're trying to make transformation, and I could understand that from what you said today. And on the other hand, well, Toyota from several decades ago has always been a blue-chip company, so that I think employees want stability and I think that aspect also is seen among the employees. But you have to make transformation within that kind of atmosphere, so that is going to be a very big hurdle. So how are you trying to realize this? Well, if I knew the answer, it would be quite easy. But yes, there are many people who want stability. And however, well, for a company, size is important, but more than size, I think it's a matter of what kind of human resources have what kind of feelings in which they engage in their jobs. I think, in a word, that says it all. So, in that sense, well, we talk about ventures, venture spirits, and startups, and well, those startups, I think, have a very simple purpose. For example, they want to make better cars. And when we started out, initially, probably we had only a few employees, and now we are a very big company, and each employee is working, doing only a part of overall activities. So from the time of the automatic loom works, the company as a whole has DNA, which went through many model changes, and that has remained. And in automobile business and in industries outside the automobile business, I think that kind of potential DNA should surface, and how can we create an environment to make that happen? I believe that is my role, and I myself will step up to the plate. And well, there are many employees who are working hard, and it's not that each person can make a change simply, but I'm saying that you should step up to the plate, and I would not say, why did you hit such a ball? I would rather say you swung quite well. And creating an environment like that is, I believe, the meaning of my role, so that people can step up to the plate. And do you think that that is happening? Well, I think it's too early to say. And conversely, well, I would want to ask you to tell me what the reality is using your prowess as journalists. Well, now I think our time is up, and so we would like to close here. And thank you very much for taking time out of your busy schedules to attend today.